If you're thinking about selling your business, you might be in for a rude awakening. Did you know that around 80% of small businesses listed for sale never actually sell? So many owners think that they can just list their business, find a buyer, cash out, and walk away. But the reality is that selling a business, finding a buyer, and getting a deal over the line is really, really hard. I know because I've been there, and I've spoken to many, many founders who have tried to sell their business at least once and failed. In this video, I'll break down the 7 main reasons why businesses fail to sell and how you can avoid them. Unprepared financials. A buyer is about to put thousands, hundreds of thousands, or millions into your business. They are not going to take a leap of faith. They're going to scrutinize every single transaction coming into your bank account and leaving your bank account. They're going to want to have access to your accounting software, and they're going to be asking loads of questions. If your books are a mess, or if you've been running loads of personal expenses through the business that you can't really explain, or if you can't demonstrate very clear profitability and how you're getting to that profitability, you are creating a huge amount of risk for the buyer. If the buyer senses risk, they're going to do one of 2 things. They're going to drop the price, or they're going to walk away. So work with your accountant, clean up your books, make sure that every single transaction is easy to explain and verify. I say every single transaction, but buyers of small businesses do expect things to be not quite perfect. They know that small business owners are doing a lot of this stuff themselves. So if there are anomalies or if there are any issues, just be open about them. It's to be expected. Overdependence on the owner. If your business crumbles the minute you walk away, why would anyone buy it? It's not worth anything to them. Most buyers don't want to buy themselves a job. Think about documenting your processes and your systems, training other members of your team or even AI agents to run the business with less involvement from you. The more hands-off you are, the more valuable your business becomes because it's less risky. And the less risky your business is, the more likely you are to complete a deal. Unrealistic valuation. I get it. You've built this business, you have a number in your mind of what it's worth, but you need to be realistic. I've done another video on valuing businesses, so please check that out, and I'm always happy to have a conversation about this. Many owners price themselves out of the market and the business just sits there. It never sells. I highly recommend doing your own work to establish roughly or generally what your business is worth. The problem with asking a broker or an advisor is that they're in a sales process when they're valuing your business, and you'll be much more inclined to buy their services if they give you a bigger number. But if that big number isn't realistic, you're going to be very disappointed, and you're either going to have to settle for a lower number or not sell your business. And that's not saying anything negative against brokers or advisors. That's just how selling works. You focus on the positive. That's how you close a deal. Declining revenue or no growth potential. No one, or almost no one, wants to buy a sinking ship. Your business is usually valued based on your previous financials, but the buyer has to be able to see the future, and they have to feel that this business is going to be profitable or successful in the future. If your revenue is dropping or your growth has stalled, buyers are going to hesitate. Think about ways to optimize your profits, cut costs before you go to market, because even a slight upward trend as you go to market can make a huge difference in your ultimate sale price. But also, while you are in the process of selling your business, that's a key time where owners take their eye off the ball. And that's a real problem because that's the thing that will jeopardize your sale. So you have to focus on selling your business, getting through due diligence, meeting your buyers, spending time with your broker, marketing your business. All of that takes a huge amount of time. And at the same time, you have to maintain your profitability, your growth. Don't let the exit process distract you from maintaining your business's performance. It's really important. It takes months, sometimes even years to close a deal, and the buyer is going to be watching your every move during that process. So many deals stall, fail, or have to be renegotiated because during the period between agreeing the sale and completing the sale, performance stumbles. Don't let that happen to you. Poor deal structure and lack of flexibility. A lot of sellers make the mistake of demanding all cash deals or refusing earnouts. But the reality is, most buyers want flexible terms to reduce their risk, and owners should be somewhat accommodating of those. Consider structuring a deal that works for both the buyer and the seller, whether that includes some deferred payment, a staged process, or an earnout. But if you've built a profitable business, always get some cash out at deal completion, because after that, you have very little control over what happens next. Not marketing the business properly. You can have the most valuable, interesting business in the world, but if no one ever sees it, it's never going to sell. Is your broker taking your business to the right market? Are they marketing it effectively, or are they just putting it on a listing site and waiting for a buyer to appear magically? Selling a business is a marketing exercise. It's about telling the story of your business, positioning it in the best light to the best buyers, and creating some competitive tension. You want a bidding war because that's how the price gets driven up. The right outreach strategy to the right buyers is what sells your business. You've left it too late to prepare for the sale. Selling a business isn't like selling a car. You don't just wake up one day and decide, I'm going to sell my car. You have to prepare, and the earlier you start preparing, the more likely you are to have a successful sale. The best exits are planned years in advance. In fact, the very best exits are planned on the day the business is launched. And if you haven't been working with your exit in mind, you are going to leave money on the table. So it's really important to get started on this process right now if you haven't already. Consider starting your exit process years before you decide to sell, or even if you never decide to sell, because it will pay off in the long run. And you can speak to me about that because that's the coaching that I offer to small businesses. So if you're thinking of selling your business, make sure your books are clean, your team can run the business without you, your valuation is realistic, your marketing is solid, and you're flexible on deal terms. And if you want more content on selling your business the right way, hit the subscribe button, or at the very least, like this video. And if you're serious about selling, book a call with me and we can start planning your exit strategy together.